Good morning, everyone, and thank you for joining today's Korea pre-market call. We have a genuinely eventful morning in Seoul, so let's get straight into it. At 7:40 a.m. local time, Samsung Electronics released preliminary second quarter results, and the headline is a record 89.4 trillion won in operating profit. That is the largest quarterly operating profit in Korean corporate history. At the same time, the Korean market itself is working through one of its most volatile stretches in years, with the KOSPI volatility index near 87, while the VIX sits in the mid-teens. Today's briefing walks through what the earnings mean, how we read the tape, our scenario map for the session, and how we suggest global investors position around it. Three things matter this morning. First, the fundamentals. Samsung just printed 89.4 trillion won in operating profit, 6.2% above consensus, and up over 18-fold from a year ago. The earnings engine of this market is running at full power. Second, the global backdrop is supportive. The Philadelphia Semiconductor Index gained 2.2% overnight, the Nasdaq rose 1.1%, and the main Korea ETF in New York jumped 5.4%. Third, and this is the tension, the local market is still working through a positioning reset. Foreign investors have sold for 12 consecutive sessions, and local volatility remains elevated. Our bottom line is constructive but disciplined. We see a wide-range session centered between roughly 7,900 and 8,200 on the KOSPI, and the quality of the Samsung number is the swing factor through the day. Let's put the Samsung number in perspective. Operating profit of 89.4 trillion won for the second quarter. A year ago, the same quarter produced under 5 trillion. That is an 18-fold increase, driven by the memory pricing supercycle and AI server demand. Against the street, the beat was 6.2% versus the Infomax consensus of 84.2 trillion, and it landed at the very top of the most optimistic domestic forecasts. Revenue of 171 trillion won was up 129% year on year. One more point on quality, and this is important for the bull case. This quarter absorbs a one-off provision for a special employee performance bonus, estimated in the high 10 trillion won range. Strip that out, and the underlying run rate is above 100 trillion won per quarter. In other words, this is not a peak quality question. The core earnings power is stronger than the headline suggests, and the headline itself is a record. A quick recap of where we stand. Monday closed at 8,051 on the KOSPI, down just under 0.5%. But the closing print does not tell the story. The index opened up 1.2%, ran as high as plus 2.95, sold off to minus 3.37 by midday, and then recovered most of that into the close. A 6 percentage point intraday range that finished essentially flat. The chart on the left shows why we call this a reset rather than a downtrend. Down 8% one day, up 5.8 the next. This is leverage being flushed and repositioned, not a change in the demand outlook. Under the surface, the flow pattern is remarkably consistent. Retail investors bought 3.6 trillion won on Monday, while foreign investors sold 1.9 trillion, their 12th consecutive session of selling. Samsung rallied 2.75% into the earnings print, while SK Hynix gave back 3.4% on rotation. The key takeaway? The market defended the 8,000 level under heavy selling pressure, and it did so the day before the biggest earnings release of the quarter. The overnight setup is broadly supportive. New York closed higher across the board, with the S&P up 0.7%, the Nasdaq up 1.1%, and most importantly for us, the Philadelphia Semiconductor Index up 2.2% on firm AI server demand data from the Asian supply chain. The Korea ETF in New York surged 5.4%, which tells you global money was already leaning into this earnings print. The currency is orderly. The offshore dollar won quote sits within half a won of the onshore close around 1530, and the 10-year treasury is stable at 4.47. Neither is a headwind today. Now, the note of caution at the bottom. Despite the record beat, Samsung traded roughly 3% lower on the NXT pre-market platform after the release. We read this as classic sell the news supply from traders who bought ahead of the print, rather than a verdict on the numbers themselves. Night futures were off a modest 13 basis points. So the tape question for today is simple. How fast does that mechanical selling get absorbed?
If it clears by mid-morning, the record print gets to speak. That is the pivotal tell.
This slide is the single most important context for global investors. Look at the two numbers side by side. The VIX, global equity volatility, is at 15.6. That is a calm, risk-on regime. The VKOSPI, Korea's implied volatility, is at 87. That is a crisis-level reading. Decouplings this extreme are rare, and the source is entirely local. Korea is working through a leverage unwind. Margin loans above 36 trillion won, mechanical flows from single-stock leveraged ETFs that amplify moves into the close, and 12 consecutive sessions of foreign de-risking totaling more than 38 trillion won. The constructive interpretation, and the one we hold, is that none of this reflects a deterioration in demand. AI server orders are accelerating, memory pricing is rising, and Samsung just proved it with a record print. Historically, when volatility is homegrown and fundamentals are improving, the dislocation resolves toward the fundamentals once the forced supply clears. Record earnings arriving into exactly this setup is how that constructive path typically begins. Here is our probability-weighted map for today's session, generated by our daily Bayesian scenario framework. For context, yesterday's forecast landed inside its modal band, so the model enters today with a clean scorecard. Our base case, at 35%, is a wide-range session between roughly 7,890 and 8,212, where earnings strength offsets the remaining flow pressure, and we close near flat. The bull path, at 20%, activates if the pre-market sell the news supply is absorbed by 10:30 local time, and foreign futures flip to the buy side. Above that sits a melt-up scenario at 8%, where short covering into the close auction window accelerates the move beyond plus 6%. On the downside, we carry a 24% bear case if the selling spreads to SK Hynix and the index loses the 8,000 level, and a 13% tail scenario driven by the mechanical interaction of leveraged ETF close auction selling with margin call supply. Added up, and 63% of the probability mass sits at minus 2% or better. Volatility is elevated, but the skew of outcomes is more balanced than the headlines suggest. Two practical items for anyone trading Korea today. First, the levels. On the upside, 8,812 is the top of our baseband and a natural first trim zone, with 8,534 as the gate to the melt-up scenario. That upper level sits almost exactly on the 8,500 resistance that local technicians are watching, so expect it to matter. On the downside, 7890 is first support, and 7407 is the crisis floor, which again aligns with the widely watched 7400 shelf. When a quantitative band and the street's chart levels agree, those levels tend to be respected. Second, the mechanics of the final hour. Single-stock leveraged ETFs on Samsung and SK Hynix hold roughly 12.9 trillion won onshore. Their daily rebalancing is mechanical. A 3% move in the underlyings forces roughly 800 billion won of same-direction flow into the 230 to 330 window. It amplifies whatever trend exists at 230 in both directions. The practical rule we give clients is simple. Do your execution in the morning session and avoid initiating or unwinding positions in the final hour, where price discovery is distorted by these flows. 3 watch items, all real, all in our view contained. First, Hanwha Ocean. Canada selected Germany's TKMS as preferred bidder for its next-generation submarine program, worth up to 60 trillion won over its life, and the stock is trading roughly 18% lower in the pre-market. This is a meaningful single-name repricing, and it will weigh on defense and shipbuilding sentiment today. But the company retains reserve supplier status, and its broader global order pipeline is intact. We treat it as idiosyncratic, not systemic. Second, the Bank of Korea published a warning on the feedback loop between single-stock leveraged ETFs and margin lending above 36 trillion won, and some lawmakers have floated delisting these products. Near term, that is a sentiment overhang for the products themselves. Medium term, we read it constructively. Regulatory attention to a known amplifier is how systemic tail risk gets reduced. Third, foreign flow inertia. 12 straight sessions of selling is a heavy streak, but the character of the flow is mechanical de-risking, and a record earnings print is precisely the kind of catalyst that has historically turned such streaks. Today is a live candidate for that turn, and we will be watching the futures book closely. So how do we translate all of this into positioning for global portfolios? 4 principles. 1. Own the earnings, respect the tape. The structural memory upcycle is now confirmed by delivered results, not promises. We favor using this volatility to build core Korean semiconductor exposure on weakness rather than chasing intraday strength. 2. Let price come to you. First support is 78.90 and the deep value zone extends towards 7,400. In a crisis volatility regime, staged entries at predefined levels consistently beat single point timing. 3. Keep dry powder deliberate. For tactical books, we are comfortable holding elevated cash, around half, and we want to be clear that this is a position, not a concession. This regime rewards patience and punishes forced participation. 4. Mind the microstructure. Execute in the morning session, avoid the 2:30 to 3:30 rebalancing window, and treat close auction prints with a healthy dose of skepticism. Put simply, the fundamental story is the strongest it has been in years, and the market is offering it at a volatility discount. Discipline is what converts that discount into returns. Let me close with the key message. Korea this morning offers a rare combination. Record delivered fundamentals trading at a volatility discount created entirely by local positioning mechanics. That is a setup that rewards disciplined accumulation. 3 things to watch through today's session. Whether the Samsung sell the news supply is absorbed by 10:30, whether foreign investors turn buyers in the futures book, and the 2:30 flow checkpoint into the close. We will follow up with a post-close note this evening Seoul time. Thank you for joining, and I am happy to take questions.